In the spring of 1839, on the shores of Canton, Commissioner Lin Zexu ordered a spectacle that stunned foreign merchants. Barrels containing 20,000 chests of opium were split open, their contents flowing into the sea under the gaze of Qing officials. In his memorial to the Daoguang Emperor, Lin framed the issue as one of sovereignty, asking how an empire could endure while silver flowed out to pay for a poison that corroded bodies and the tax system. Behind the moral language, his alarm was material. Specie that entered China for tea, silk, and porcelain was now leaving to settle the bill for a drug imposed from abroad. For decades, Britain lived with a structural contradiction. Tea became indispensable fuel for the industrial working class and a pillar of customs revenue. Yet, Chinese consumers had little interest in British manufactures, forcing London to pay in silver bullion. Between the late 17th and early 19th centuries, millions of kilograms of European silver were absorbed by the Qing economy. The East India Company recorded this imbalance with precision. Tea imports exploded from £100,000 in 1706 to 5 million by 1782. The Commutation Act of 1784 tripled sales, deepening dependence on Chinese supply and hard metal. By 1800, tea and related commodities made up close to 28% of British customs revenue, turning the teapot into a fiscal instrument. To close this tea gap without exhausting metallic reserves, British strategists turned to the opium fields of Bengal. From 1773, the company transformed poppy cultivation into a state monopoly, advancing credit to 1 million licensed cultivators and processing the sap in factories like Gaza into standardized opium balls. These were packed into chests and auctioned in Calcutta to country traders, who smuggled them into a Chinese market officially closed to the drug. What Lin Zexu tried to destroy was the keystone of a triangular financial architecture, linking London, Calcutta, and Canton. The silver paid by Chinese buyers for opium was deposited into the company's accounts and used to purchase the tea and silk that British consumers enjoyed, reversing the flow of bullion, without a single coin leaving the imperial core. By the 1820s, this mechanism had inverted the balance of payments. Instead of receiving silver, Qing China lost it to pay for an addictive commodity, a reversal described as the most prolonged international crime of modern times. Our thesis is that opium was not merely a drug, but the currency that allowed Britain to convert a trade deficit into financial hegemony. By monetizing addiction, the British state engineered the largest state-sponsored narcotics operation in history. To understand this, we must look at tea's role in the fiscal architecture of Britain. By the late 18th century, tea was a daily necessity, its consumption embedded into the rhythm of industrial labor. The East India Company's ledgers show the scale. Tea imports surged after the 1784 Commutation Act. This meant larger volumes of tea had to be paid for in silver, since Qing officials insisted on bullion over British textiles. By 1800, taxes on tea and sugar accounted for 28% of British customs revenue. The state depended on this pipeline, even as it struggled to pay for it without bleeding reserves. The Qing Empire operated from self-sufficiency. Its artisan sector produced textiles and ceramics at an unmatched scale, and Chinese buyers saw little value in British woolens. Under the Canton system, foreign merchants were confined to one port, and traded through licensed Hong merchants, demanding silver. Consequently, European silver flowed into China for more than a century. Economic historians highlight a turning point when Britain adopted the gold standard in 1821. By anchoring its system in gold, London increased the pressure to find an alternative to silver. The answer lay in Bengal, where the British could direct agricultural production. The opium poppy offered high value per weight and an addictive effect that made demand insensitive to price. From 1773, the company established a monopoly, binding peasants to poppy through credit. Agents advanced cash to growers, obliging them to devote prime land to opium, funneling the latex into centers like Gazipur. Inside factories, workers kneaded the paste into balls. The product was a standardized, industrial commodity, designed for long-distance commercial networks. To preserve deniability, the company avoided transporting the opium itself. Instead, it auctioned chests in Calcutta to private traders, who smuggled the cargo to offshore anchorages, from where boats carried it to Chinese buyers. The silver paid for Indian opium was deposited with company representatives in exchange for bills of exchange, allowing that silver to pay for tea and silk. By the late 1830s, opium sales covered the entire British tea bill. The deficit was transformed into a surplus financed by addiction. Opium functioned as a high-yield export asset that generated the silver needed for British consumption, while unsettling the monetary foundations of the Qing state. When Lin Zexu seized the opium, he was trying to halt a macroeconomic hemorrhage. The silver outflow tightened the screws on a fiscal system that relied on silver for taxes. Under the Daoguang Emperor, observers spoke of a famine of silver. In 1820, 1,226 copper coins bought one tael of silver. By 1849, that figure reached 2,355 for peasant households transacting in copper but paying tax in silver. The effective burden nearly tripled. Historians linked this squeeze to social unrest like the Taiping Rebellion. If Lin Zexu saw opium as a mortal threat, a different perspective prevailed in London. British officials framed the destruction of the stock as a violation of property rights and free trade. John King Fairbank described the opium trade as an international crime, while Michael Greenberg argued that the Opium War married naval violence to the defense of illicit trade. Gallagher and Robinson coined the term imperialism of free trade, where the British objective was to open markets on favorable terms. The war was a state-sponsored effort to defend an income stream that compensated for the silver drain. Gunboat diplomacy functioned as the enforcement arm of a narcotics-based clearance mechanism. However, historians like S.R. Platt challenged the idea that British policy followed a single plan, stressing the fragmentation of interests. Merchants, naval officers, and administrators arguing that improvisation mattered as much as design. Other scholars focus on the fiscal role of opium within the British Raj. By the mid-19th century, opium accounted for a substantial share of India's export earnings, helping finance administration. Defense of the trade was inseparable from financial interests tied to colonial investment. Recent studies quantify the contribution of opium to British industrial capital. Meanwhile, research on the long-term impact on China highlights lasting damage, weakened fiscal capacity, and an externally oriented trade regime. Within Chinese historiography, the opium episode is the start of a century of humiliation. Scholars linked silver outflows to a structural crisis in a tax system built on silver. Frank Dichter offers a revision that questions the trope of a China reduced to helpless addicts. While not denying the financial role of opium, he warns that political agendas have often flattened complex patterns of consumption into a simple story of decadence. What emerges is a layered picture in which opium is a fiscal instrument, a weapon of expansion, and a catalyst of crisis. The clash between Lin Zexu and British gunboats marks a moment when competing stories about capital and sovereignty hardened. By the end of the 19th century, the system was eroding. The success of botanical experiments in Assam and Ceylon freed London from its dependence on Chinese tea. Indian and Ceylonese plantations expanded, flooding the market. In 1879, Chinese tea supplied 70% of London's imports. By 1900, it collapsed to 10%. As the deficit closed, the macroeconomic imperative for narcotics exports weakened. At the same time, humanitarian movements in Britain condemned the trade. By 1907, negotiators formalized an exit through the 10 Years' Agreement. Indian opium exports to China ceased in 1917, closing a chapter of imperial history. Yet the scars remain. On the British side, historians emphasize how opium revenues supported the fiscal base of the Raj. Opium was a colonial mechanism through which the empire externalized costs. For China, consequences included tax strain and a restructuring of trade under treaty port conditions. The Opium Wars opened ports and restricted Chinese sovereignty, constraining fiscal policy. In Chinese memory, this nexus of war and debt became the starting point of the century of humiliation. Opium stands for the transformation of a favorable balance of trade into dependence. Modern historiography reminds us that even powerful symbols are constructed. Scholars argue nationalist agendas simplified the landscape into an arc of decline. Opium did not cause China's decline in isolation, but it functioned as a critical lever. A state-engineered trade that rebalanced bullion flows and locked China into an unequal position. Describing the 19th century opium system as the largest state-sponsored narcotics operation captures how addiction became a tool of macroeconomic adjustment and political domination. The story of how a drug grown in Bengal settled Britain's accounts with China is a warning about the ways economic instruments structure power. I'm Bruno, and it has been a pleasure sharing this chapter with you. Subscribe to Money Trail History.